Good evening and welcome to tonight's webinar. It's member-only content where we look at ASX investment opportunities in review for the 26th of April. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to discuss how that works, please call me on 1300 614 002. The technology we use tonight is the members area. If you're joining us as part of your 30-day trial, just as a reminder, you can subscribe for $1,320 for the year, and if you'd like some tuition on how to navigate around the technology and get the most out of it, please contact me on the office number there. The chart up on screen is the Nasdaq. We're on the cusp of heavy earnings week being released in the US, where we see Microsoft, Google in particular this week, which will be large cap tech stocks that the market has relatively high expectations for that level of earnings growth. So with that, let's start this evening, and we'll have a closer look at the graph of the Nasdaq there. What we're watching for is recognizing that a lot of good news is already priced into the technology sector, in particular in the US, and also within the industrial companies in America as well. There's no reason to think that the result from Microsoft and Google will not be a good one. It's just how the market sees the valuation of those stocks and whether they feel that that level of growth that we've seen over the last 12 months can be maintained over the next 12 months. Tesla report this evening, which will be an important result for overall sentiment. We've seen some deterioration in the pricing of some of the cryptocurrencies, and if we were to see a soft result from Tesla tonight, that sort of high risk basket of assets, which I put Tesla in, may come under pressure. So we'll continue to keep an eye on how that plays out, and I'll update you on the blog. Really with a view that if we see the Nasdaq closing below this average, we'd start to focus on a few short opportunities in the market, but we're not quite there at the moment. So for this evening, I was just going to go through the top 50 and then just highlight a couple of ETFs that we're focused on. It feels like the opportunities in the market are thinning out a little at the moment, but the purpose of tonight is to obviously help identify where you want to be focusing your efforts at present in the market. Iron ore's strong, pushing up towards 190 US a ton. So you're seeing upgrades to Fortescue, BHP, Rio. Fortescue's under buy conditions. It's found support off this 1860 level. It's above the moving average. I think Fortescue's got more to go given where iron ore is trading at the moment. Centre Group, this is a new switch from sell conditions to buy conditions. It's hard to get too excited about these property trust. My preference still remains to own the SLF as a broad ETF play, but just highlighting that Centre Group's now shift to buy conditions here, supported around that 260 level, and that'll be added into our model portfolio. Rio under buy conditions, strong iron ore prices, switched to buy there at around that 107, 108, now pushing 122, holding above the moving average, so the momentum remains strong there. Stockland's under algorithm buy conditions, support there around that 410 level, and continuing to grind a little higher. Aristocrat Leisure sits in our top 50 model. It's under algorithm buy conditions, so it's switched from sell to buy there at around this $30 or around $29. Continues to make higher highs, higher lows. Just draw your attention to, given that we're looking at a smaller group of numbers, the top 50 rather than the top 100 tonight, I just spend a little more time just referencing the interim signals. So just for an explanation on that, this is the primary algorithm buy signal, and these are interim pivot points, these arrows. So what it's saying is when you get the buy signal there, the green arrow, the price moving above the average, that you're getting a fairly bullish setup there. As price progresses and we get this interim sell signal, it's not an outright algorithm sell. It's just saying within this uptrend, we're now getting to a point where maybe it's getting a little overbought, and that's the way to think about those red and green arrows, is sort of interim trends to highlight overbought or oversold conditions. Amcor we like, recognise that probably not a lot of momentum in the short term given the lower read that we had on overall plastics demand in the March quarter, but owning Amcor here and selling covered calls, it's a way to drive reasonable cash flow for portfolios, and I'm still inclined to be a buyer of Amcor on a dip back around that $15 level, which we closed pretty close to that today. GPT, game preference is SLF, which is the ETF, but GPT is in the model after switching from sell conditions back into buy conditions, and it's slowly grinding higher following that. Mervac is in the model as well, so again, preference SLF over Mervac, but you can own these individual stocks, but just have a think about what your exposure is to too many real estate investment trusts opposed to holding fewer names but getting broader exposure through the SLF. Suncorp we like. This is under algorithm buy conditions here at around this 970, so that's now in the model. Sydney Airport's under algorithm buy signal, maybe upside to $7, not much more than that. Woodside Petroleum, this is certainly one you want to have on your watch list. At the moment it's below the average, and you may just want to be a little bit patient and wait for evidence that the price crosses above the average. But if we just stop to look at what's going on here, so it's under algorithm buy signal, it's got a positive pivot point higher, so the third and final confirmation may be just simply to wait for the close above that moving average. And just as a reminder, the way the trade table works is it takes into account those factors, and you would expect to see, in the case of Woodside, it's an algorithm buy signal, it's got the positive pivot point, but as we just looked at, it's below the moving average, so that doesn't have the double green arrows. At the moment, out of the top 20, the only ones that meet those three factors, which is a buy condition, positive pivot point, and above the moving average, of Rio and Fortescue. On the short side of the market, the double red arrows is the same in reverse, so it's undersell signals, negative pivot point, and it's below the moving average, which would be your setup for a short trade. So we're up to Woodside, just moving on from that. Commonwealth Bank, so it's under algorithm buy conditions, support here at around this $81, just drawing your attention to the negative pivot point arrow there. But the stock's put on about a little over 10% since shifting to algorithm buy signals. Coles, the market is increasingly forming a view that we're seeing a slowdown in demand for both Coles and Woolworths, which will feed through to lower earnings in the current result, but dividends, franking credits still remain attractive. We still expect the businesses to deliver low single-digit earnings growth, so we're a buyer of Coles on the dip, and any weakness in Woolworths where we see it back around that $40, we're a buyer of Woolworths as well. But Coles around that 15 to 15.50, we're a buyer. Zero. It's performed strong from that 110 level that we focused on, now up at 140, 150, so you can think about taking profit. But it remains under algorithm buy signals, but again, the interim pivot point just saying that we're getting up to a level where we may see a little bit of profit taking or selling pressure creep in there. Wesfarmers, extremely high quality business. Double-digit earnings growth, something in between say 10 to 14% EPS growth. And if you don't already own this, you want to be a buyer of it on any pullback. If we were to see weakness back below 52, you certainly want to think about adding that into portfolios again. Computershare under algorithm buy conditions. Afterpay under algorithm buy at 150. Cochlear under buy conditions at around, that was around 200, now pushing 223, so it's up a little over 10% since being added in the model. Woolworths, it's been under buy conditions since $38, now pushing sort of $42, albeit retracing a little. So keep an eye on this sell-off here in Woolworths. If it gets back down to around that $40, I'd be a buyer of that on the weakness there. Goodman Group, terrific business, less than 2% dividend yield, getting a little expensive. So for traders, we've started taking profit on this at around $19. But any downside, maybe back. If we were to see a test back between $17 and $18, I'd be inclined to buy Goodman again. Lend-Lease under algorithm buy conditions, positive pivot point. Fundamentally, we really want to see a bit more detail on the upcoming earnings result. But maybe around this $12 level should be support. I think the long-term thematic there for Lend-Lease still remains positive. Treasury Wines switched to algorithm buy conditions now, so from sell to buy. So this really only just comes onto the radar today. We put support in there at just below $10, and we'll watch this and look for buying interest to build. The stochastic starting to move a little bit higher, but we want to see the price action above the moving average there. Qantas under algorithm buy conditions there to since forming sort of this low, initially in late December there at around $4.50, another subsequent signal there at $4.50 in late January, mostly trading sideways, but looks like a reasonable support levels put in place. A2 Milk now back below the moving average. So there's a couple of ways you can think about that. You either sell the stock, buy call options, which limits the downside, but still of the view here that there is value left in the A2 Milk business. We just need to wait and see whether we've got another earnings downgrade coming through on the next trading update. Medibank, NIB Holdings delivered a good result today. That stock rallied a little over 10%. Origin, not doing there at the moment. So now all these stocks are under sell conditions. Insurance Australia, you can maybe make a note of this if you haven't already from prior week recordings. At around $4.50, this should provide a good recovery opportunity over the next 12 months. And that can be added to sort of that basket of recovery trades that we're looking at. NAB, more inclined to think about the Aussie banks on the short side from these levels if we see the Nasdaq struggle. So we'll keep an eye on if we get a close below the average in the Nasdaq, then start to have a look at the short side of the Aussie banks. BHP, our preference at the moment is Fortescue Rio over BHP. Dexus, preference is SLF. Horizon, not doing there at the moment. AGL, not doing there. ANZ, again, look at that on the short side if Nasdaq trades below the average. The index, will focus on the short side of the index if we get a soft read on the Nasdaq. Macquarie, high quality business, returning back to the same pre-pandemic earnings growth, so any sell-off there in Macquarie would be inclined to buy the dip there. Westpac, bit cautious on. Ramsay Healthcare really moving sideways, a little over 2% dividend yield, maybe sort of 4-5% earnings growth maybe at the max there for Ramsay. Brambles we like. The trading update was reasonably positive, around 5 to 6% earnings growth. The stock is under algorithm sell conditions, and we've got the lower high pattern here. You'd really want to see it break back up towards that $11 for confirmation that we're starting to see institutional demand increase for Brambles. Ampol under sell conditions at the moment. Transurban has a recent shift to sell conditions, so this was a profitable trade where we'd been holding it and now shifted to algorithm sell signals. It's been removed from the models. CSL, we haven't yet removed CSL, but just highlighting that it's now shifted to sell signals. ASX under sell signals, but we have not remove that from the model as yet. Sonic Healthcare under sell conditions, we have taken profit on that one. Telstra under sell conditions, for the most part we're sticking with Telstra, especially in individual portfolios. The upcoming separation story for Telstra should unlock value. Dividend yield remains attractive, and management upgraded earnings growth into F year 22 and 23. James Hardie under sell conditions there, so is South 32. Orica under sell conditions. They report their earnings in a couple of weeks, in I think second week of May. QBE Insurance under sell conditions, so preference Suncorp over QBE. Santos under sell, preference Woodside, Oil Search and Beach over Santos. APA now under sell signals, resistance at around that 1040 level. Newcrest under sell conditions. So interesting across the gold names. We've seen GDX, we've seen Miners, we've seen Gold Roads Resources, Newcrest all switch to sell signals. Northern Star hasn't, so it really remains, which aligns with our fundamental view. Northern Star's the one that we think has the most cost synergies post the Saracen merger, which de-risks sort of the business a little. So we're comfortable sitting with Northern Star as our preferred gold exposure at the moment. But for the most part, we haven't yet cut Newcrest or Gold Roads, and there we are back to Fortescue. So clearly the iron ore stocks is where the momentum is in the market. The energy names, as I mentioned, Woodside, Beach, and Oil Search, you could start having a closer look at those. Some of the defensive names in Coles and Amcor, Woolworths on a sell-off, just as a reminder there. Otherwise, a number of areas of the market, a number of stocks are starting to look a little overbought where they are at the moment. Where we are continuing to take advantage of recent sell-offs is the Cure ETF, which is exposure to US biotech. We've mostly taken profit in CNEW, which is the China New Economy ETF that's had a reasonable rally, roughly 10% over the last few weeks, and we're replacing that with buying into the IZZ, which is the China large cap there at around $60. Otherwise, a lot of the ETFs we've taken profit on that were in, Moat and the GOAT WDIV. So a handful of ETFs that we've been buyers of for some time, we've taken profit on. Just to touch on a couple of US stocks, and I appreciate everyone who responded to our survey, and just to provide some feedback on that. So on average, about 30% of our subscribers either currently own US shares or intend buying US shares. So I appreciate it's not the core interest, but just to introduce some of the names that active in the US at the moment. This is a American depository share for a Chinese listed tech company. So we like that. In the US at the moment, Snap within the social media platforms, we think that this continues to provide strong growth potential, and I put a post on the blog today about this. We'll continue to track just the top line revenue growth that Snap, making sure that they're seeing that growth. And to put it in context, it's between 50 to 100% growth over a 12-month period at a revenue line. They're still not profitable, but they're right on the cusp of that. So we're looking for that inflection point, but it does require revenue to keep growing there. Within the US biotech space, so Biogen, down there at around 260, we like that. Qualcomm reports their earnings later this week, so you might see me update the blog on the post around Qualcomm, but it's rallied from around 120 up to 135. Eli Lilly, so within the the big pharma stocks in the US. We like this at around 180. Again, I'll update you on the blog as the earnings come through. One of our preferred, which you may have heard me speak about in prior months, one of the preferred stocks in the US is Raytheon. This is the result of the merger of Raytheon and United Technologies. We think that's one of the best ways to play reopening trade in the US, given that they have divisions that service commercial aviation. Also within the Chinese internet stocks, JD.com. So code JD.NAS. You may like to have a look at that. PDD, which I posted on the blog today. Again, this is a Chinese e-commerce company at around that 125. So there's a couple of stocks there. As we get into this week's earnings in the US, anything of real note, I'll update you via the blog. And if you'd like to discuss any of the ideas that I've presented tonight, or need some tuition on the software, please don't hesitate to call the office on 1300 614 002.